Relax, evaluate objectively and decide carefully. Presentation on Relaxo Footwears Limited. Relaxo, a growth story of great momentum, watched over 6 years from 2017 to 2022. Profit after tax doubles from 120 crores to 232 crores. Price gives encouraging support to profit, but market cap surprises, growing 4 times from 6,000 crores to 24,000 plus crores. And the resulting PE is 50 in 2017, growing into massive 105 in 2022. As a result, the yield falls year on year. Ultimate year in 2022, the yield is just 1%. Exceptional capital appreciation, rich valuation, but serious concerns on upside in the near term. A look at revenue growth and profitability of last 9 quarters. June 20 was the worst affected quarter from COVID. June 21 quarter grows year on year 36.7%. June 22 doesn't disappoint, gives almost a similar growth, but disappointment is waiting in EBITDA percentage, falling from 21.8% continuously reaching a low of 12.9%. The reason being input inflation and the lagging delay in price hike, putting operating margins under severe strain. Relaxo has a challenge on hand in respect of return on capital employed. Its net worth has grown every year by about 200 crores, but corresponding profit is not visible in earning before interest and tax. As a result, ROCE, which was 32.6 in March 2018, fell by almost half to 17.9% in 22. The fall, its intensity, and the trajectory in a descending channel has remained a great concern. The dividend payout of Relaxo doesn't respect the growing profits. Dividend has moved at a snail's pace, detached from the profits. Payout ratio appears good when the profits fall down. The dividend yield is next to nothing, and the normal payout quite unimpressive and not keeping with the profit or the market price. The daily chart of Relaxo disappoints. 52-week high 1448 in November, 52-week low 925 in May 22. Current market price 983 with a Fibonacci retracement of around 11%. The current market price is at a discount of 32% to 52-week high. Stock has been consolidating for the last 1 month all through July, but its chances of cutting across 50, 100 and 200 EMA in the near term appears unrealistic in the background of high PE ratio and continuing margin pressure. I am Vittal Prabhu with a weekly video on stock learning simplified. Hope you will find the video interesting and useful. Relaxo has remained a dominant player in the footwear industry, both in terms of volume and revenue. Its major strength is the segment in which it operates, value segment, where competition is low and the market is largely unorganized. One of the key strengths is shareholding pattern of the company. Promoters holding 70% plus, mutual fund and FPI with a support of about 10%. Retail and others hold the balance of 19%. Promoters have got hands-on experience in the business, quite strong in the north, and the company now focusing on growing into southern and western parts of India. For Relaxo, it is domination with volumes. Realization per pair particularly has moved from 135 in 20 to 152 in FY22, but there is a corresponding increase in the cost per pair also during the period, suggesting the company is moving up in the segment, and this is also evident from the fall in the quantity from 18 crore pairs in FY20 to 17.5 crores in FY22. company's strength is its in-house manufacturing capacity of over 10 lakh pairs per day. It is also adding plants, recent addition of 50,000 pairs per day to double its sports shoes and sandals capacity. In growth and profitability, it is a mixed bag for Relaxo. Revenue has grown at a CAGR of 10%, while profit after tax has delivered a 5-year CAGR of 14%. PAT percentage moving up, drops during the latest year. A similar trend visible in respect of EBITDA percentage. GST has been a blessing to the company, getting additional market share, also because it is the weakness of the unorganized players in the value segment. Relaxo Footwears operational cash flow substantial, almost 300 crores on an average last 3 years. Special feature of working capital movement this year, build up of inventory to the extent of almost 300 crores, taking away operational cash flow. Minimal dividend, resulting operational surplus. Addition of fixed assets, setting up plants, investing every year more than 100 crores consistently, that is Relaxo. Relaxo, known for healthy operations, constant flowback, working capital management with planned asset building. While the company says working capital increase as a part of its planning, it becomes a matter of concern to see in March 19 the number of days was 130. Today it stands at 202, a substantial jump. This is with due recognition to the fact that company is quite aggressive in its strategy, and it has got a strong supply chain, and it has got a massive expansion program on the anvil, and also its plans to tap the southern markets. But somehow the abnormal increase looks like a red flag in otherwise normal operations. All things considered, Relaxo, with a market share of less than 10%, has got a vast scope for long-term growth. As a great homegrown brand, Relaxo stands out as a role model under the Make in India initiative. Hope you found this video on Relaxo to your liking. You can access similar videos with rich content at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time, support and interest, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional before taking action of any kind.